Good afternoon and welcome to this PAY360 panel session. My name is Mark McMurtrie. I'm an independent payments consultant working right across the ecosystem, and it's my pleasure to act as a moderator for this session. We've got a great lineup of speakers for you, and we're going to be looking as it's a crystal ball session, and we're looking at myths and realities and what will the payment industry look like in 2025. This is the 5-year viewpoint. So we've got some great questions for us. What we've also got is, as well as some questions I will be posing to the panelists, there's going to be an opportunity for you to ask your own questions. So please do think of those and then use the facilities to be able to raise those questions so that we can pick them and come up to get responses from the panelists for your questions. So do start thinking ahead about your questions. But without further ado, what I would like to do is introduce the 3 speakers. We've got Eduardo from Mastercard, we've got John Chaplin, and we've got Lola from Citibank. But they're probably better to introduce themselves. So Eduardo, would you like to kick off and tell us about yourself and the company you represent? Thank you.
Sure. Thanks, Mark. Hi everybody. Nice to be here this afternoon. So my name is Edoardo Volta, and I head up FinTech and EMEA for Mastercard in UK and Ireland. So what does it mean is that my team really looks after all of the digital bank and the non-traditional issuer across the UK and Ireland. So think about all of the digital neobanks like Monzo, Starling, Revolut, as well as some of the large prepaid being sponsored like PPS, PaySafe, and so on. So we as Mastercard have been at the forefront of the fintech space from very early days, even before fintech was even a name. So we were working with those companies from the very beginning. And the role of me and my team is really to help them grow within the Mastercard franchise. Personally, I've been in the payment space for 16 years, spanning different roles between American Express and Mastercard. And I've been with Mastercard for the last 4 years, where I've covered different roles. First, working more in the SME space, and now more recently in the digital banking space. So for me, it's really exciting to be here today because it's the digital banks and my customer are at the forefront of what's going to happen in the future and what the customer wants. And so just being here and talking to all of you about what the payment ecosystem will look like in 2025, it's exciting. It just gives a sense of how the industry is evolving and is changing in the next few years. Thank you very much, Eduardo. And it's a great experience, and I'm sure we're going to benefit from that. And sounds like you're a busy man with all these fintechs to look after. So Lola, perhaps you could tell us about yourself now.
Sure, thanks, Mark. Good afternoon, everyone. Great to be here as well. My name is Lola. I work for Citi, a global bank with on-the-ground presence in over 90 markets. So we very much have our tentacles in the payments infrastructure developing across the globe. At Citi, I'm part of what we call the institutional clients group, where we focus specifically on providing kind of banking and payment services to large global multinationals, digital natives, fintechs, like Eduardo was mentioning, as well as the public sector, actually, so the full spectrum. And within that group, I lead commercialization and growth for a new payments business line that we're launching, which is called Spring by Citi. Some of you might have seen press releases around this, but essentially, Spring by Citi is bringing to market a brand new full payment stack to support digital companies, also multinational corporates whose business models are evolving to digital in terms of their e-commerce journey. So how do they make and receive payments online? And prior to that, I've led the e-commerce strategy for the institutional group across Europe, Middle East, and Africa. So very much looking at the payment landscape evolution, how infrastructure is changing, and how do we help these, especially digital natives and fintechs, grow their business on a global scale, leveraging our own sort of global network. So yeah, very excited to be here today and really talk about the changes that we're seeing across a variety and the diversity of those changes, both in terms of geography and different things that are emerging. So thanks for having me.
That sounds wonderful, Lola, and thank you very much. We look forward to hearing your perspective as well. And now, last but not least, John Chaplin, perhaps you could introduce yourself and the organizations you're working with today.
Hi, Mark, and good afternoon, everybody. I've really been kicking around the payment space a little bit longer than Eduardo, because he'd been there 16 years and I've been there probably nearly twice that. I used to work for Visa for a long time, where I drove their commercial payments franchise and then ran their processing business in Europe, Middle East, Africa. Then I went to First Data, helped integrate all of their diverse operations we brought around the world to build tried at least to build a global network. Over the last 10 years, I've worked a lot in private equity. So these days I work a lot of the time in Africa for Helios investment partners, involved in buying and then managing payments companies. And that can be, we actually have a bank called Crown Agents that does emerging markets FX. We have traditional payments processing companies in West Africa, and we have mobile payment companies in Egypt. So I get involved in that heavily. But also I spent some time back in Europe, and here I'm chairman of Global Processing Services, GPS. That's the company that processes for people like Revolut and Starling. I'm involved in open banking with a company in Ireland. And if I'm not doing that, then I spend time working with regulators in places like Australia and Vietnam and India and places like that. So I try to keep myself busy.
Sounds like you're very busy, John.
Yeah, well, fairly, except I'm stuck at home now, Mark, like everybody else.
Well, I think we should really be congratulating the EPA to putting such a great lineup of speakers for this panel session for the PAY360. I know it's been difficult, and we're all joining you virtually for this part of the panel session, but some great perspectives. But without further ado, I'm going to now ask a couple of questions to each of the panelists, and let's hear their thoughts on them. I said it was a crystal ball session. We're looking forward to the 5-year horizon to 2025. So this my starter for each of you, and maybe Eduardo, you could be the first one to respond to this. What do you think the payments ecosystem will look like in 2025 in comparison today? What do you think the payments ecosystem will look like in 2025 in comparison today? Eduardo.
Yeah, hi, thanks, Mark. So yeah, it's a crystal ball session, and that's definitely a crystal ball answer. But so I think what there will be a few things that will change, or rather than change, I would say will evolve from now. So when you look at what's happening and what COVID has done also to the payment ecosystem, we are seeing digital payment taking a bigger part of the payment ecosystem. Digital payments are becoming more relevant. And this is a trend that will definitely continue in the future. So I believe there will be an acceleration of digital payment. And digital payments, by digital payments, I mean a variety of payment, which are basically not card or cash, actually, but it's a payment for remote commerce, payment via cryptocurrency, payment via alternative account-to-account payments. So alternative methods of payments that are becoming more and more relevant in everyday's life and more widely spread. These will definitely continue and accelerate. And that for us poses an interesting question as an industry on how we make those payments frictionless, but as well safe and secure, because that's what people expect. They expect to make payment in a way that is safe and secure, and they know that their money are being kept safe when they're moving. So that's a key part of 2025. When I look at the other aspect is the flip side of the coin, I think there will definitely be a reduction in the use of cash. Cash will still be around. My belief and Mastercard belief is that cash is a valuable tool for the certain type of payments, but we have seen the reduction of cash growing in the coming year, in the past years, and it will reduce even further. It will reduce the use of cash. Will be limited to specific use cases where digital payments or cards are not necessarily the best way to make payment, but we'll see a reduction there for sure. But then I think what is really key for us to think about for 2025 is not so much about what banks will do or what fintechs will do. It will be about what consumer wants. Yeah. So consumer will become even more king. Option and choice will make the consumer decide who are going to be the loser and who are going to be the winner. And actually that losing and winning streak will be a fine balance of customer experience, user experience, so knowing that the user have a convenient and easy way to pay, balanced with the safe and security of the method of payment. If the companies that will be able to convince consumers that they have struck the right balance and have addressed those two needs will be the one coming out stronger, not just in 2025, but even further.
Okay.
That's my view.
Sounds good. John, would you like to add some thoughts for yourself about what it's going to look like in 2025?
Yeah, Mark. So it's interesting just picking up on what Eduardo said, because I think 2025, I think there could be quite a lot of change. But I think if you go back at 2023, if we want to be precise, I don't think there will be much change, because I think at the moment, normally when you get a crisis, lots of companies die, and we can see that in various segments in restaurant business and the travel business, etc. I think in the payment business, there's been so much of a move to electronic, and again, what we were just hearing is, if you take the COVID crisis as being really around for 20 weeks, I think we've had more migration from cash to electronic in 20 weeks than we've had in the last 20 years.
Probably right, yeah.
You know, despite all the advertising we've all tried to do, suddenly something's done it for us, and that's been a huge factor. And of course, when you get that, then, it's the rising tide, isn't it? So I don't actually think COVID will push out many people from the business in the short term. So I think, unless unfortunately you happen to be in the travel space or something like that, or so lots of the travel products, the FX products, they could have some issues. But I think that there'll be a rising tide. But I think by 2025, I think we'll start to see more significant changes. And really, that's just, the Bill Gates argument coming back that says, in 2 years, you overestimate the amount of change, and in 10 years, you underestimate the amount of change that can happen. So I think that I still don't feel confident, and I hope Lola's not going to get upset with me now, but I don't really feel confident that the big banks are going to become any more flexible and any more customer orientated in the future than they are today. And that's a big statement. And of course, there will be ones who do, and there'll be ones who don't. But I think on average, I don't see the big banks becoming more in tune with what their customers want. And I did a piece of work last year that said most of the large scale digitalization programs in the big banks are not working. They're delivering a few things that are sort of valuable, but I don't think they're transforming them in the way that it was sold. So I think they're making huge amounts of money for the big consulting companies, but I don't think we're seeing a big transformation. And I think what that does do then is it leaves the market open for competition from those people who really do listen to the customers. But I think there is a difference around the world, and certainly so. I think in Western Europe and in the US and Canada, I think the big banks are going to struggle to get more in tune with what their customers want. If you move into other areas of the world, well, there is no real fintech industry so far. So maybe you'll see the banks trying to get with it before they actually have to respond. So I think we will see some different impacts as we go around the world. But, cut it short, I think that the banking industry in general, particularly the large people, are going to struggle, and we're going to see more and more competition, and that will be driven by those who listen to the consumer versus those who don't.
So, Lola, before you respond to John's challenge about the big banks, why don't you give us your opening thoughts on how things are going to look in 2025, and then we'll pick up his theme around the winners and losers and fintechs v big banks. So start off sharing some of your thoughts on the 2025 landscape.
Sure, thanks, Mark. I think I echo what both Eduardo and John have said in terms of the shift to digital payments. I think the other thing I would add to that, though, is I think as we go into 2025, we are going to see the core payment rails becoming more real time, right? We have various types of payment rails today, even things like card payment rails. While some aspects of it are real time, there are still sort of batch settlement, a couple of days settlement behind it, even some of the e-wallets. So I think one of the things that we've seen pre-COVID and will continue to accelerate is the market investment in real-time infrastructure.
Okay.
You know, at the moment we have 30 plus markets plus SEPA with real-time payment systems live. That is going to accelerate quite significantly across the globe. And that's just going to provide essentially the core rails. I think what's really going to be exciting as we go into 2025 are going to be the overlay services being built on these core real-time rails. So we've seen that in places like Asia, where QR codes are being combined with real-time payments to deliver new innovations in terms of how consumers engage and interact. But even beyond that, we've heard about things like request to pay, driving real-time collections. But request to pay is going to evolve not only in terms of online real-time collections, but we'll even see that going into things like point of sale payments and enabling new ways of payments for SMEs who may not be equipped or may want alternative to cards. So I think that shift to real-time data-rich payment systems, many of these systems are being built on ISO 20 or 22, which means you can carry a lot more data beyond just the payment. And I think this is going to evolve not only in the context of consumer and retail payments, but also in the world of B2B payments. Okay. So we see the work that SWIFT has already started with GPI. Arguably, SWIFT is a very old institution, but to John's point on transformation, undergoing significant transformation itself. So we see GPI, for those who are not familiar, which is the Global Payments Initiative, which is essentially about bringing faster, cheaper, and more transparency into cross-border payments. So now about over 65% of global cross-border payment traffic on the SWIFT infrastructure now goes through GPI, which means that there is full end-to-end visibility for companies that are making these payments. Majority of these, more than half of these, are being settled within 30 minutes or even less, in a matter of seconds. And so we're going to start to see those benefits in B2B payments really come and crystallize with these sorts of developments. And fintechs themselves are also benefiting, right? I think Currency Cloud announced, just a couple of months ago, that they're now leveraging the GPI tracking data through API and making that available to their end customer. So these transformation of the core payment rails is going to really deliver value, create an opportunity for innovative companies, both banks and fintechs, to deliver new sorts of innovative services to their clients. I think the second thing we need to look at, I just want to pick up a point very quickly linked to what Eduardo was saying, is obviously the more we digitize everything, the more we go into a world of digital everything, the more new vulnerabilities we will see. So I think there's going to be increasing...
What do you mean by that? What do you mean by the vulnerabilities?
So I mean by that in two senses. So one is in terms of from a cybersecurity perspective. I mean, we've seen, whether it's been companies or banks being exposed to this. So I think there's going to be a lot more focus across the industry in how do you bring more cyber resilience into our infrastructures, into the services we provide. And I think there's going to be a lot more companies in that space. But linked to that as well is going to be much more focus on fraud management, because as digital payments grow exponentially, fraudsters are getting increasingly more creative. So how do we link better sort of authentication models to reduce fraud, linking that to better digital identity structures so that we can identify people better, but do that in a way that it doesn't compromise the payment experience? I think that's going to be another big area. So there's benefit in terms of better infrastructure that's real-time and data-rich, but on the flip side, there's going to be a lot more focus on how do we build resilience to address vulnerabilities from a cybersecurity and fraud perspective.
Thank you. We've heard from each of you about how COVID has been an accelerator for some of these changes. Will any of these changes just be temporary, and will we just revert back, or do you think the changes and move to digital, are permanent ones? Eduardo, your thoughts on that?
I do believe most changes are permanent, and it was an acceleration of those changes. Those changes were already in the making, and they just happened faster. If you look at contactless, so the pickup of contactless has been huge during COVID. I mean, Mastercard has done a lot of researches in this space, and around 45% of consumers said that they've increased significantly the use of contactless, and actually 22% are basically saying that they're spending on all of their expenses on contactless, and this is something that has been in the making for a while. If you remember, the big pickup was when TfL in London started accepting, and contactless became more relevant, and now it's just an acceleration of that. And I think as well that what we've seen as part of COVID which is actually really interesting, is that a lot of users switching to digital banking, using a digital bank or using more the mobile banking app, because that became the easiest way of servicing customers during the COVID period. And I don't think those users will revert back to old habits. They will continue wanting to be serviced more digitally, even when COVID passes.
Yep. So, Lola, do you think any of the changes will have just been temporary?
I think most of them will be permanent. Probably the temporary one, I think, is going to be around travel. I think as things ease, the need for face-to-face interaction, it may not be to pre-COVID levels, but I think we'll start to see a lot more in terms of the move to more travel. But from a payments perspective, I tend to agree with Eduardo that a lot is permanent. I think some of the more permanent ones that I see is especially in terms of commercial models, right? How consumers and businesses are starting to engage in commerce in a more digital sense, where you have established brands now wanting to go direct to their own consumers, not necessarily just in terms of working with platforms like Amazon and Alibaba, but actually engaging directly with consumers. I think that will continue. I think even in the B2B space, we've seen that as well. I think we've seen a lot more in terms of B2B e-commerce coming to the fore, and many companies looking to digitize not just the purchase experience, but the payment experience around this. And I think that will continue. The final point I would make is just more broadly for companies in terms of from a supply chain perspective. I think that's another big area we've seen, obviously, for many companies with COVID. And that focus on resilience of the supply chain, I think that will continue as well. So yes, I think a lot of them are probably here to stay.
And John, I know you work in many of the international markets. Have you seen any trends there relating to COVID, that the response being different to what we've seen here in Europe?
Well, Mark, I think that the acceleration of let's say contactless anywhere where it works that's global. There's a problem in markets where there isn't contactless, there's not a normal point of sale infrastructure. What I'm seeing there in some of the markets that we've invested in is now rapid purchase of like Android style terminals.
Yep.
So that is the kind of thing that will take months, if not years again. So, if you like, the pressure I think will be enduring, but I don't think the results will be quick. Whereas at least in a lot of the developed world, the infrastructure was there. You could turn it on. You could get, like my bakers that has never taken a card suddenly decided to get themselves a small terminal, and it worked within 1 week. Perfect. But if you've not got that mindset because you're in sub-Saharan Africa or you're in one of the Asian markets, then it's not going to work through immediately. But I think the other interesting thing for me is the pressure from the regulators to keep the cost down. So I think there's a realization now, there's a greater realization that payments has got a role to play, a significant role to play in getting economies moving again. Now, what does that mean? It means facilitating payments, and it means minimizing the cost. Incidentally, I think we're going to see a big change over the next year or two with Apple. I think the EU has got their hands onto Apple now, and I think the view will be that Apple Pay is going to have a real problem. If Apple wants seriously to lock up control of that secure element, I think that's going to be seen as a big issue by the regulator. Because in a way that reduces the ability to spread contactless payments easily and cheaply, and in fact puts an extra tax on it. So I think if you want a prediction, one of the outcomes of this is going to be that it emboldens regulators to take on Apple and switch to attacking them rather than attacking Google and Microsoft. So I think Apple may be in for a tough time.
Thank you, John. So time, unfortunately, is running through, but I want to try and squeeze in another question. Who do each of you going to see as the winners and losers? And I've also, this comes back to some of the things, fintechs and large banks. So who do you think are going to be the winners and losers? And Lola, why don't you kick off with this one?
Sure, I would love to respond to John's comments earlier. No, I'm kidding. You know what? I think the concept of winners and losers when it comes to banks and fintechs, that's how the story started. But I think we really are in a world of co-opetition. And the reason why I say that is, if you look at a lot of the successful fintechs or even fintechs in general, behind the majority of these fintechs, the core infrastructure, the core payment rail that is enabling them to deliver these digitized services are bank rails, right? It's the financial infrastructure that's delivering that. So a fintech success, in essence, to some extent, is tied to the success of the infrastructure, having reliable infrastructure. Granted that, they manage the kind of user experience, but you still have the core banking rails behind that. I don't think the banks are being complacent with that. I mean, I think that is why, as I was talking about in terms of the kind of modernization of the core payment infrastructure, with real-time payments, with Swift GPI, with the shift to the sort of global standard around ISO to promote more interoperability, banks are going to continue to do that to provide a lot more efficient rails to help fintech deliver on the front end. Just one more point to that. I think there's also the collaboration will continue. So banks working with fintechs to deliver new services and innovative services to their clients as well. Sorry, Mark.
Eduardo, who do you think are going to be the winners and the losers?
I cannot agree more with Lola. I mean, it's a question of partnership. It's not a question of winner or loser. I mean, I run the fintech team, so obviously I would love to say the fintech will be the winner, but I don't believe the fintech will win unless they learn how to partner with the bigger banks. Like the bigger banks need to partner with fintech to provide nimbleness. It's a question, they represent two parts of the ecosystem that both serve specific needs. Together, they could do it much more powerfully.
John, you're investing in many payments companies, so obviously you should be looking at trying to work out who those winners are going to be. What's your perspective?
Well, clearly, if I put my African hat on, then the mobile it's a mobile first. In fact, it's a mobile only world. So you've got to adapt whoever you are, you have to adapt to that world. It'll be those who adapt best. But the other thing is, go on, let's have a bit of an argument with Lola, because I think the whole real-time payment rails driven by banks, that's overcooked. I think that banks have got not a very good history of making rails open to everybody. I think they tend to design them for their own benefits. And I think, so therefore, I think the card industry is in fact real-time. They can do everything real-time. I think the virtual card is a fantastic product. And I don't necessarily assume that something which is being driven by regulators, which is what real-time payment is going to make a big incursion into card transactions at a point of sale. Card transactions will be different. They'll be virtual card. There's no reason why Visa and Mastercard can't do real-time settlement. It doesn't have to be economic. But who's going to win out of those lot? I think it's going to be the one who responds best to what the customer wants. And I think the card organizations who already have non-bank members are more likely to be in tune with what the customer wants than excessively bank centric models.
For the 20 years I've been working in the payment industry, customers are being told how they can pay. I think we've pivoted now. Now the customers say how they want to pay.
Yeah.
This panel session was a crystal ball session. And it was, we were asking for predictions of where things are going. So please, could each of you give me a closing thought or a prediction of where you see things happening by 2025? Lola, why don't you start with this?
Sure. Thanks, Mark. I think one prediction is, one prediction we're thinking about the fact that I think payments are going to become commoditized increasingly. As these various alternatives come up, whether that's real-time payments, e-wallets that coexist with existing rails. Payment in itself will become commoditized, and the real sort of value, or the winners, if you will, be how can you monetize the data around the payment to create and deliver sort of new services and innovative services to clients. So I think you're going to see many more providers across the ecosystem, whether that's fintechs or banks or whoever, really focus on the critical need to focus on data and how you can monetize data to create new services. Because the core payment rails, even card rails, as alternatives come through, it will put pressure on the commercials of even card rails. So I think data is going to be a big one for 2025.
John, your closing thoughts or predictions?
So picking up on the data point, I think that's going to drive something. I think it's going to drive B2B payments. I think if you're an entrepreneur starting today, you'd be a very brave person if you wanted to invest in consumer payments, if you're thinking of getting rich and making lots of money, which is what a lot of people do. So I think that B2B payments is a place where the customer appreciates the value that the data can give them. So I think we're going to see a big uptick in, if you like, the brightest people and the best money going after B2B payments rather than going after consumer-based payments. Everybody'd like to dream that they can rebuild Alipay. I think it'd be far better off to work at the more nuts and bolts end with customers who pay you, because that's what businesses do. They pay you for value, and therefore start again, start in B2B.
Eduardo, the last thought is with you.
Yeah, I think I'll go back to my initial opening statement and also what we were saying before. In the future in payments, customer will be king even more. So the decision, they will be the deciding factor on who win and who lose, and only the company can give customer what they want in terms of user experience and safe and security will be successful in the payment space. That's my prediction.
Well, thank you very much for all your insights. There's been some controversy there, some different views, but some great perspectives. And as it was a crystal ball, and perhaps I should suggest to the EPA, we bring you all back again in a few years' time, just to see how your predictions went, how your perspectives, see if these big banks are surviving, if fintechs are taking over, if real-time payments are going to converge on the card business, if it really is a mobile first, or if consumers have decided to go back to cash and abandon all this digital process. But thank you very much for all your contributions. We're now turning over the session to the questions from our audience, and a lot of questions been coming in as we've been speaking, and so we're now going to spend 10 minutes answering those questions. So thank you for now, and now we welcome you to answer the questions to our audience. Thank you very much.